500 startups, the quintessential cool valley-based incubator cum seed fund has been expanding its roots worldwide, but they seem to have a keen interest in the Indian market. Tech Circle got hold of all the three honchos of the fund, Dave McClure, Paul Singh and Pankaj Jain, to have a status check on their investment plans for India. The trio happily revealed their plans of indulging in about 1 to 2 investments on a monthly basis in the region, and not so happily talked about their new speculated fund 500 Startups Walla.
So Dave, my first question to you is that what do you think of the whole investment ecosystem in India currently?
Well, I'd say it's still developing, but we're very optimistic for where it's headed. Certainly a big market opportunity, a lot of local talent, and seems like starting to be a decent angel and seed fund environment, although that's also still developing.
Okay. So in terms of the startups that you all are seeing in India, what do you think is coming up? Are there more product startups that you're seeing, or are there other companies, mobile, techie? What is upcoming and what is interesting?
Sure. I think maybe Pankaj and Paul have a better perspective, but I'd say probably mobile and e-commerce look like the initial opportunities. Okay. Hopefully, as payments and delivery systems develop, we'll also be able to do more of that.
Okay.
Yeah. No, I mean I agree with that completely.
Okay.
I think that you're going to see more and more of it come out faster and faster. I mean, the last decade or two in India has been kind of known as like the back office of the world. And you've got all these service companies that have these huge cash accounts. And I think part of the reason why M&A wasn't happening was that these guys just didn't understand what product companies look like. You know, when they see a 20-person product company, they don't see, hey, there's 20 smart people that are building a fantastic product. They're thinking, hey, I don't need to buy that for a couple million. I've got 100 guys that I can throw at this. But now with you've got a couple IPOs here recently. You've got an increasing number of M&A that's happening. I think it's just going to start feeding on itself. And look, I think if you look at even the quality of the audience and the size of the audience at an event like this, I think it just kind of reinforces the optimism that everybody has about the rise of product startups in India.
Sure.
I think that's what this decade of India will be remembered for.
Yeah. So Pankaj, you have been hired to look after the Indian market, to spruce up the Indian investments. So what are you looking at? You already
just to be clear, we stole him. He didn't get hired.
Yeah.
Okay. No, but the role that he has is India focused. So maybe what is it that you're looking for as an investor in the India market?
So I think there's a lot of interesting things happening in terms of solving very Indian problems. I think a lot of those things are very early stages right now, but I think there's a lot of opportunity there, and I think there's a lot of interesting things that people are trying to solve that can also be transplanted to places like Africa and other places in Southeast Asia also. So I think that's very interesting to me personally.
So in terms of investments, are you guys, what is your focus? Would you be looking at a pre-revenue stage investment or early stage, or a company which has proved its business model? What is the stage that you're looking at?
I think probably definitely looking at least at functional product use, ideally some customer usage and revenue, but if possible we'd probably like to be investors before the company really hits traction, hopefully headed in that direction.
Yeah.
Okay. So what is your view on micro funds? Your new speculated micro fund. So what is your strategy behind it?
I believe our lawyers have told us that we can neither confirm nor deny the existence of our nuclear weapons.
I know that line.
Yes. We are big believers in investing internationally around the world. We have partners on the ground here in India, but also in Brazil and Mexico, and looking at other places in Asia and maybe the Middle East.
Okay.
Part of the reason to potentially have separate funds that focus more specifically on a region is because there may be other LPs or investors in those funds who want to see that money put to work more locally. You can also help incentivize local managers by giving them more direct economics on the funds that they're managing. But probably just more beneficial to have people on the ground who are domestically focused and able to do a little bit more in the ecosystem than they would be if we were just operating as one main fund out of California.
Okay, so without confirming or denying the existence of your nuclear weapons, why is the size of the nuclear weapon so small, I would ask?
Oh, wow!
Ouch.
Jeez, that's a very pointed question. Paul, since you have so much experience in the small category, maybe you should answer that one.
I think the underlying thing there is that the economics of that smaller fund do allow for smaller checks.
Okay.
Right, and that's the underlying. I think that's one of the most important underlying things is that.
So doesn't that automatically shift you to an even earlier stage of funding?
No, not necessarily at all.
No?
In fact, I think what it does is optimizes our ability to invest at the stage that we want without. So if you think about it, so our main fund, our global fund, is a $50 million fund. It's very hard to get the economics to work when you're possibly writing a $10,000 to $25,000 check from early startup here. So yeah, I mean that number is sort of picked out of the air. Anything smaller than that, even smaller than that, wouldn't even make sense in terms of the costs that we incur just to set it up. And frankly, look, it's our first time setting up a regional fund here in India. We'll just see how it goes.
I think also just
hypothetically.
Yeah, of course.
right.
That's a disclaimer.
I mean, the fact of the matter is that for a lot of internet businesses, you really don't need to write very large checks to get started. Right. So when we're operating at incubation and seed stage, in one sense, it allows us to be flexible in the types of deals we can get into. Hopefully, we can still have an impact for the entrepreneur. But we intentionally want to invest in a larger number of companies at a smaller scale when we're getting started. It doesn't mean that we wouldn't write larger checks in the future, but at least over the last 2 years or so, we haven't really needed to write big checks to have an impact in most markets.
Okay, sure. So how does this work? If you have a new fund, hypothetically, again, so if you have a separate fund, does the main fund does not invest in that particular country? Is the smaller fund only fund that invests? How does it work?
I think we'd probably follow on out of the main fund after we've seen some success or traction after we've invested in the smaller fund. So the idea would be to be a little bit more active out of a regional fund, hopefully do more investments, more deals in that region, and then with the ones that are working, probably follow on out of the regional fund, but also out of the main fund.
Okay,
as well.
so maybe the early stage startups, the pre-revenue or the very early stage, you would consider from the newer fund, and the ones who are already functional from the main fund. Is that it?
Well,
I am kind of.
The way I think a lot of it would depend on the economics and the check sizes that we're looking at. So I think because of the size of the main fund, for larger checks, we'd probably look at the very least co-investing out of the main fund. So I think that's how we're approaching it.
Yeah, I think that's a really important thing to just understand is that it's not. Think of it as a regional specific fund that is able to get into these earlier deals in an economically sensible way, but then it's backed by the global fund. Because the best companies here are probably going to need. So even though startup costs have dropped, scaling costs are still high, or probably even going higher depending on how you look at it. So having a larger fund that backs it up is good.
I think also, we're trying to help, stimulate activity primarily between, say, incubation or early stage seed and Series A. There's probably a pretty significant gap there. And there are a lot of other successful funds here and incubators that we'd like to work with. So that's another reason why intentionally the check size might be a little bit smaller, but still encouraging, hopefully, other angel investors and other seed funds to co-invest.
Co-investing model.
Yeah, I think absolutely.
That's how we always
So
operate.
that was my next question was that, amongst the whole Indian ecosystem, a lot of accelerators are coming, incubators are coming, big funds, small funds. What gap are you looking to fill? What place are you looking to fit in?
Well, India is interesting. So, in the U.S. anyway, we have far more angels and far fewer downstream investors. So so some people call it like the VC squeeze, if you will. Right, more people competing for fewer people that can write the big checks. India almost has the opposite problem, where that room back there is full of people that can write $1 million plus checks, but very few people in there are able to write $5,000, $10,000, $30,000, $50,000 checks. So hopefully we can do that, but then also kind of fill that next kind of gap between the 100 and 250K range, where the company isn't quite ready for Series A, but
just before Series A kind of stage.
And it's interesting, you've got other firms here that are now filling that gap too, right? Bloom and India Internet and a few other folks. So I think there's a huge opportunity there.
And you've already made some 10 investments, I think, in India. How many more do you think you'll make in, say, next 1 year?
We don't have quotas. Yeah. So the way,
Hypothetically,
Yeah.
the way that I, oh, sorry, go ahead.
no, go ahead.
The way I would just answer this usually is just that, like, we don't have quotas, but if we find a company that's really appealing, we're going to invest in it. And so I don't know whether that's 10, whether that's 30,
Okay.
but we're going to be looking really hard.
I'd probably say those are the boundary conditions. I would say probably at least 10 next year. I don't know if we'll get to 30, but again, depends on what the opportunities look like and what Pankaj thinks is awesome.
With an average check value of
Again, I think it really depends on the economics. Like Paul was saying before, it gives us flexibility to go down to 10 if we need to.
Okay.
It gives us flexibility to go up, to 250 if we need to, depending on the stage of the company and the deal size and all that. So.
I mean, in the U.S., we've been probably averaging around $75,000 on the initial check. I would say it's probably not likely to be higher than that. It might be a little bit below that.
And any sector focus you have for India market?
We were just talking about this the other day. I think, probably we'll stick close to things that have real transaction value. So jobs, travel, housing, education, maybe autos or other types of things. I think there's clearly a growing middle class market in India. Sometimes the wrong things get copied from the valley. There's a lot of very speculative social media companies that don't have clear business models, and a few of those will be successful, but that's probably not where we're going to be as focused as much on providing internet marketing and distribution around core purchases for the consumer and small business market.
Okay. So a lot of my entrepreneur friends say that it's really easy to raise funds in US and it's really difficult to raise funds in India. So you as an investor in both the regions, maybe you can have an insight on that.
I think it's still, it's easier in the US, but I would not say it's necessarily easy, particularly if you don't live in New York or Silicon Valley.
Okay.
So a lot of the other markets in the U.S. are maybe just as challenging in some ways as what's happening in the major cities here in India. Things like AngelList do make that a little bit easier, but still you've got to have functional product. You hopefully have to have some business model, potentially a path to customers and revenue.
But are the investors in the valley more open to risk, more open to taking a chance maybe?
They're crazier. I don't know if they're smarter.
Good one.
I think no investor's looking for risk. I think that's true.
It's kind of strange, right? One of the reasons why I think people are a little bit more revenue focused in India is probably because there's not a long history of exits, and so it's more challenging to see where liquidity comes from unless the company's already getting to some revenue or some significant traction.
Very, very quickly, like the near-term plans in India, any investment that you can expect in a very near-term future?
I think again we'd probably be doing on the order of 1 or 2 investments a month, and it's going to be based on whether we see interesting opportunities and whether companies catch Pankaj and Paul's eye, but I think we're pretty optimistic there's going to be lots of opportunity in India.
Okay. Any word for the entrepreneurs? How to get money from 500 startups?
Functional prototype, have a clear customer problem you're working on, hopefully have a clear business model and revenue path.
Great. Thank you so much for talking to us.
Thank you.
All right.
Thank you.